Hi, this is Zach Mead from Zach's Traders Cafe with a look at the major markets on Wednesday, the 1st of June. Just a change of emphasis here over the analysis of recent days. 6150, the support zone for the UK index. That's just around the 200-day moving average level, 61.52, and top of the range after yesterday's key reversal to the downside, 6,300, and really we want to see an end of day close outside those parameters, otherwise trade that range of 150 points. RSI at 53, so the buy is still on the upside and for a break through 6,400 and beyond, but just wait for that end of day close above 6,300 for confirmation of a possible buy. Obviously below 61.50 would make this chart look rather painful. Onto the DAX, and slight change on the charting front here too. Line of resistance around the 10,350 level. That's from November. We want to see that broken comprehensively before regarding this market as capable of a new leg to the upside. Obviously 10,500 zone, the resistance for April, and then the gap up to 10,700 and beyond in December, but just want to see that 10,360, 10,350 zone broken, or on the downside 10,100 is the uptrend line from February, and that would mark notional support. Onto the Dow, and question marks here as well after yesterday's price action. Just this resistance line there from April needs to be broken there at 17,900. We can do that quickly this week, then one would be looking for 18,500 and beyond, but just a hint of 17,500 to 17,900 over the near term, especially in the run up to the non-farm payrolls later this week. Onto the S&P, and interestingly here, it's we can still retain the previous bullish charting configuration. That was showing a move possibly up to 2,200 while we hold above the 50-day moving average at 2067. That's still valid, but probably one would want to see dips towards the 50-day line before taking the plunge on the long side. For the Nasdaq, we've got the situation where this is probably looking the best of the big three US benchmarks, still well above the 50-day moving average, 44.36, probably looking for dips towards that to buy into, and the target there, the top of a February price channel at 4,800, obviously still feeling the benefits of the Warren Buffett stake building in Apple. Onto the currencies and cable, the big event as far as the week to date is concerned. We had a massive key reversal to the downside on the Brexit mob getting a lead in some polls of the referendum. Interesting that that was the third failure for the cross below the 200-day moving average of 147.50 for May. Maybe third time unlucky. At this stage, probably only back above the 10-day moving average at 145.79 would delay the prospect of at least a test of the uptrend line from February, which currently runs towards 143.20, and that was also the area of the support for last month, so logical support there for cable. Probably the biggest warning, though, apart from the key reversal down, is the break of this extended RSI uptrend line from January, as we saw with gold, where there was an equivalent signal that can lead to quite a sharp follow through on subsequent sessions. Next up, euro dollar, and here we see just a sort of messing around here between the floor of this trend channel from November and the 200-day moving average falling at 110.96. End of day close below the 200-day line would suggest that we're going lower, possibly much lower, back towards 108. Otherwise, wait for a break of the 10-day moving average, 111.61. That's the green line before pressing the buy button. One would expect rather dead price action there unless those two parameters are broken. On to dollar yen, and a bit of surprise here in the sense that we broke through the 50-day moving average quite easily at the end of May. Well, that's at 109.71, and have now then failed quite badly. Rather reminiscent of the that bull trap through the 50-day line at the end of January, beginning of February. So one would, if you were a bull of this cross, you would fear, or at least hope, that that's not going to happen again. End of day close back below the 20-day moving average at 109.39, probably the best sell trigger at this stage, just in case we do manage to revive the recent rally in dollar yen. RSI at 51, so still just above the neutral 50, so that would also suggest that waiting for sub 109 is probably the best way forward if you are a bear of this cross. Finishing off with gold, and here it's been about the 1208 level. That was the intraday low for March, while above that, as we are at the moment, we could at least head back to 1240, which is neckline, former neckline support for this market, and also the area of the 50-day moving average, 1245. Otherwise, end of day close back below 1200, which was the 1199.80 was the intraday low of last month, could lead back to the 200-day moving average at 1163. This stage probably going for the upside to prevail rather than the downside, but the easiest thing here is actually to let the market decide. That's it for me. More updates at the same time tomorrow.